Good morning. I'm John Kosar from Asbury Research in Chicago, Illinois, and this is a preview to this week's Keys to This Week report for the U.S. stock market. This one is for the week of December 19th, 2016. Keys to This Week is available on the Interactive Brokers platform and also available right from the Asbury Research website at asburyresearch.com. And it lists the 10 most important and potentially market-moving charts and data series for the upcoming week, and includes our near and intermediate-term market outlook, as well as key buy and sell levels. Let's scroll through the report, past the conclusion, past the matrix, which, by the way, takes those 10 keys to this week and organizes them into near and intermediate-term positive green and negative pink categories. So we can see that just slightly we have an edge in the near-term positive category heading into this week. But let's go through the 10 keys and down to the charts and just kind of get to a couple of things that I wanted to show you that I am paying attention to this week. First of all, volatility. This is one of our keys. This is the VIX down here in the lower panel. Note that the VIX is hovering near 12. With these red vertical show going up through the chart is that historically, and this one goes back to April, but we did that so we had enough data here so you could see the detail. If you went out to 3 years, you wouldn't see any detail. But this phenomenon, it goes back several years. Historically, when the VIX has been around 12, we usually are at or near some kind of a minor peak in the stock market. So that's one reason why we've been telling clients, and mind you, we've been positive the market really right before the election and have stayed that way ever since. But what we're telling clients now is not to chase this rally. This is one of the reasons. Another reason, as we go to another one of our keys to this week, is put-call ratios are too low. Down here in the lower panel, we have the CBOE put-call ratio. We use a 5-day moving average, and we invert the scale so that the put-call ratio actually moves up and down with the S&P 500. And note, we've got a least bearish extreme. We're actually starting to retract from it just a little bit, a least bearish extreme in the put-call ratio. And you can see by those red vertical lines going up and down through the chart when this has happened in the past, like the VIX. These have been peaks in the stock market. So 2 reasons not to chase here. However, a third chart I want to cover, also one of our keys, has to do with ETF asset flows. This is a very unused piece of data that's out there. Really nobody talks about it. I've been interested in it for a couple of years now and have really aggressively started to gather data on this series for a number of different ETFs. Over the past year, we have a nice database that not a lot of people have, frankly. And what we do is we track the day-to-day asset flows inside key ETFs. This one happens to be the spiders. Note what happened here. On November the 8th, which is the day of the election, the total net assets got up above their 21-day moving average. Why the 21-day? That's a tactical, this is a tactical indicator for us. So we're strategic out the quarter, and we're tactical inside of 30 days, inside of a month. There's 21 business days in a month. So once we got up above the 21-day moving average, that told me that we were in monthly expansion. And I know from my experience of looking at this data that that was an opportunity to buy the S&P 500. And look what's happened since then. Very aggressive expansion in these assets, staying up above the 21-day. The S&P 500 will not peak until these assets start to turn down. You can see they got flat in August, turned down in September, and that was the pullback that we had into the November 4th bottom here. So the market is set for a pullback. It's not there yet, primarily because you still have aggressive asset flows chasing the trend here. Now, what's eventually going to happen is we're going to have what I call a Jenga top. If you ever played the game of Jenga, at the very end, you have a lot of weight up top and it eventually falls over. That's what's going on here. Look at the acceleration here. This means a relatively small move down in the S&P 500 will put all of these assets underwater. They'll all be losing money, and that's what triggers a move down. So again, some of the indicators we look at, and if you'd like to subscribe here, you can do so right through the IB trading platform. If you can't find it, call your IB representative and they will help you to find the link. It's a very simple process. You have to click the link and you're signed up. The entire Keys to This Week report, as I had mentioned, is available to Asbury Research subscribers via our website at asburyresearch.com or through the IB trading platform. Interested investors can request a free sample of this week's report via the contact tab on our website or by calling us directly at 888-960-0005. Have a profitable week and happy holidays.